Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Thursday, January 8th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So, two quick housekeeping items here. I'll be away from the desk most of the day here, starting mid-morning, and I won't be reachable by phone or email. So, if you need assistance, please contact the trade desk directly. Now, my partner, Bill Baruch, he's going to be on CNBC starting at 11 a.m. Central Time. He'll be on for the full hour block, discussing some of the portfolio moves we're making for some of our wealth management clients, as well as a name we added to the concentrated alpha portfolio. If you'd like to learn more about wealth management solutions, please send an email to info@bluelinefutures.com. Now, yesterday we saw more of a defensive posture in the U.S. equity markets, also in the precious metals markets, and we're continuing to see that spill over here today. So it was a challenging day for the S&P 500 and the Dow Jones Industrial Average, which racked up its largest losses for 2026. So the Dow fell about 466 points. The S&P 500 closed down about 0.3%, and both indices snapped their three-day win streaks. So you look at the precious metals, they were under significant pressure yesterday. We saw China, they raised some of their requirements here as far as looking at the margin requirements on their particular contracts. So globally, a lot of these markets are, at least exchanges are starting to try and temper some of the speculation that's going on in these markets. So you look at gold, you get the average range here at about $91.90. You look at the overnight range in the market here, about $50, sitting at a $44.30. So that's down $31.50, down about 0.7%. Couldn't recapture that 4,500 mark. That's going to be your near-term resistance. And then your contract highs above that and your all-time highs will be the next level of resistance above that. You look at the silver market. So silver's kind of interesting. If you want to do yourself a favor on the charts, look at that $70 level. That was kind of an area of support that we came down to several times, right around that 70, 70, 30. We broke below 70 once or twice, and then we bounced back on up here, making a slightly lower double top on the charts, right around the $82.67, $83 mark here. So it's really going to take this move where we get back over $82.67 on a closing basis, on rising volume, and on that type of momentum here. That's where you'll start to see those calls come back in for $90 and $100 silver. Now, if you look at Goldman Sachs, they put out a note on the silver market here saying that they expect to see continued extreme swings here. And it's really the bottlenecks. We talked about this. We talked about this a lot in October when we were analyzing those leasing rates over in the London exchanges here in the London where they keep a lot of metal and they store it. And what we saw here was the bottleneck was actually alleviated here. And to give you kind of an order of operations, what happened was that gold went up, made a new all-time high. Silver was being broadcasted specifically in India where they were saying that, hey, this is the one to be involved with. You had a lot of social media over there, a lot of influencers. And what they did was they bought up all the existing silver that was basically available, like any kind of coin shops, jewelry, wherever they sell the precious metals over in India. And what had happened was they started to secure supply in London. Well, the bulk of that London supply is being leased out to exchange traded funds or exchange for physicals here. So what happens is you have two sources that are fighting for such a small pool. That's where we saw prices originally go up, break out over that $52 range. What had killed the rally here for a brief moment was when China, they had came and they had plenty of silver and they sent it over there. Now that has all been basically absorbed back into the market. So now you've got a number of different structural supply imbalances that are around the globe. So London, that's where the global benchmark prices are set, has been left with unusually low inventories here because the metal was oftentimes pulled to the US. So if you look at US inventories, we are flush with silver right now, and you're seeing that where a lot of the refiners are turning down some of those lower grade silver and things like that. The reason why we're hoarding the silver is because there's concern that Washington could pose some tariffs on silver like what they've done in the past with copper and things like that. So these thinner inventories are creating these conditions for these squeezes where the rallies, they seem to accelerate, and then the investors really they come in, they chase that market up, and then when it reverses, they panic and they get out. And we see that type of liquidation flows back and forth with the ETFs. So again, I would look at 70 on up to about 83, draw 50% retracement on there, and that's where we're coming in right here about the moment. And you look at those ETF flows, they're also matching it up with the ETFs. They've been buying gold, they've been buying palladium, they've been selling silver, and they've been selling platinum. And you can see that they're buying gold and selling silver because of the fact that the gold-silver ratio has jumped up about 2 handles overnight. So year-to-date percentage flows, not really anything in the gold market. The exchange-traded funds, they added about 49,000 troy ounces. Third straight day of growth. Gold's up about 3.2% this year, fell about 0.9% yesterday, down about another 0.7% here today. You go to silver, you look at year-to-date, ETF flows down about 1.6%. They cut about 0.8% yesterday, and it was a big cut. It was a 7 million troy ounce cut. So they're really using some of these rallies to lighten up here, and it was the biggest one-day decrease since October 16, 2025. Fourth straight day of decline. So you look at the other macro markets, the outside markets here, they are declining overnight. Stock futures, they are losing some of their momentum, some of that New Year's optimism here, given some jitters about the economy and geopolitics, because we can see it in the interest rate expectations. They are declining overnight, with the CME's Fed watch only showing about a 13.8% chance of a likelihood of the Fed interest rate cut. You got crude oil futures jumping up about 1.5%. Those have been steeply in a bear trend for quite a while. You got natural gas bouncing for some oversold territories here quite a bit yesterday. So you look at the March meeting, 39.4%. So it declined from about 44 to 42, now 39. You look at the central banks, the discussions. Well, Fed Mirren, he'll be on Bloomberg television here. He'll also be speaking in Athens. So he's a big dove on the market and is one of the puppets for Donald Trump here. So tough to say a lot about anything economic policy-wise, but definitely wants to get the job and definitely wants to cut interest rates quickly. You look at those FX risk and rundown markets here. Well, you got the dollar. It's at 98.49. It's been rising. It's still below that key resistance, which is 98.75. You got the euro currency, 117.14. The support level is 117.09. We saw a bounce in the overnight here when the Eurozone unemployment, it ticked down to 6.3% versus 6.4%. So when that data release came out, we saw the euro strengthen, we saw the dollar decline, but no real movement in the gold market, no movement in 10-year treasuries or treasury yields. So that's something to note there. You'll get 10-year treasury yields in this range here, 4.11% up to 4.22, sitting at 4.16. Key resistance on the futures is really that 113 level, and futures sit at about 112.13.5. The high was 112.21, low 112.12. Now you look at Bitcoin for January, kind of declining overnight here, back down at that 90,000 mark on the January level. The key level of resistance on that is going to be 93,900. A break above that should get some renewed strength and some optimism with a potential push on up to 100,000. A break below some of these key levels like 86,300, well, that's going to open up the gates for broader liquidation. So anyone who chased Bitcoin going up, this XRP, the Ethereum, things like that. Ethereum's had one of the best trending ones out of the bunch. XRP had the most volatile and most savage rise back up here, and it's had that type of volatility back and forth, especially around geopolitical headlines. So if you look at, again, 86,300, I would draw that line on a chart. I would also draw 93,900 on a chart. You'll get the S&P gamma exposure. So yesterday, it was in positive territory. It flipped back to a neutral territory. And then we look to see how Europe and Asia, they are reacting here. Well, the European stocks, they fell as the investors, they really weighed in on some U.S. economic signals, some geopolitical concerns. And then Asian stocks fell for the second straight day here with the MSCI Asia Index falling 0.9%. That's the most in 3 weeks. So I'll be away from the desk. The trade desk will definitely be able to assist you in anything that you need out there. So don't feel free to reach out to me because of the fact that they're not there. The phone will roll over to them. So if you guys have any questions, be sure to check out Bill. I'll be checking him out on CNBC for that full hour block. Gives a lot of great insights as far as what we're doing on the wealth management side because we are active in those investment portfolios here. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.